Welcome to Theo Trade. This is Don Kaufman. Here we are on February 22nd, 2016. We got just about 25 minutes to go to the close, and the S&P Futures are up 25. Watch ahead to the upside. A couple of trades I want to talk about, but first and foremost, let's look at the S&P Futures here. The rip and rally kind of continues. Over this weekend, though, I had discussed about how I really believe we kind of had to go up, in essence, to be able to actually come back down. So we've got to squeeze as many traders as possible. And it looks like we've come to a fairly formidable level inside of the S&Ps. Really, all we've seen throughout the course of the day is nothingness kind of trade on, and again, I'll kind of zoom in here really tightly, very, very light volume in the S&P Futures. But if you do believe in a little bit of support and resistance, all right, we've hit this level quite a number of times on an intraday basis and faded off of it. But look towards, again, not necessarily the 1950 level, okay, but you're looking right about just shy of where we're trading right now, 1944 and change, okay, as being a fairly formidable level for the S&Ps to cross through. Now, today's trade, again, it's not about just the S&Ps. Again, if you look at just the day as a whole, wow, that gets pretty boring, right? So we tried to get to, again, right to the 1943 level is exactly what I was talking about a moment ago. We failed off of it, kind of came down. Volume really, really light. The area that sticks out to me, don't worry about volatility right now. It's just reacting to what? To an up market. Volatility is finally getting crushed back down. Oh, but still my heart, a VIX back in the 19 level, okay? The area that concerns me, again, a little bit more, is the fact that the bonds, they're just not backing off. What do you mean they're not backing off? No, they're just not backing off. And simply put, if you zoom in, and again, the bonds right now, there's a little dashed line over here. The contract rolled over. So to get a clean look, and this is important, to get a clean look at the bonds right now, you have to either contract adjust or type in the full contract. In this case, I'm going to do what's called contract adjustment. I'll just go, again, if you click this little sprocket, if you're on thinkorswim, click the sprocket, go under futures, check, adjust for contract changes. Now, you have to then hit apply and OK, but just watch right there, hit apply, hit OK. Now you're seeing a much cleaner look inside of the futures contracts. And allow me for just a moment to freeze the screen. And when you look at this contract, what do you see? Okay. Extremely, extremely tight trading range. And this thing looks like it's ready to break right now. I'd say in the next day or two, we're going to get that action inside of the bonds that's going to give us the next leg to the S&P. So again, a very, very tight range. The reason I keep pointing out this range in the bond market is this is driving a huge amount of what's been going on lately inside of the broader S&Ps, and really the world goes right into the bond market to mitigate risk. Why I keep pointing it out? Do you see the bonds backing off? Because I don't. I mean, if you compare the bonds over to the S&P futures, you're like, that does not make sense. Okay, the whole world is sitting here thinking like, is this a real rally? Are they really buying them? Well, yeah, they are really buying them. I don't know if it's short covering or not. Come on, we've gone to the 1800 range all the way back up into, like the 1940 range. There's some buyers in there, obviously, but the market in the sense of the bonds are screaming quite the opposite. It's still saying risk is here. Nobody go anywhere. Keep your hand on the trigger because we're not done with it. That's what the bonds are really screaming over there. Volatility, though, backing off. But again, volatility is a function of nothing more than what the S&Ps are doing. It's a derivative. And if you look at the volatility of the volatility, that's a derivative of a derivative of a derivative. Nevertheless, S&P some 24 points. Now, a few trades I want to discuss. First thing, I have gone out and sold another NASDAQ future. So for those of you that do kind of follow along a few of my positions from time to time, I have sold another NASDAQ future. And regarding that NASDAQ future there, where have I sold it? So now I'm short two of them. And if you're looking for what's the setup over here? I'm short one. okay, at 42.22. It's pretty much where we're trading right now. And I stress again, I'm short it because I want to be short the overall market right now. This is not like a short-term strategy here. I'm building a much more aggregate delta position. So I'm adding to my net short deltas right now. Another trade that I've actually been working on is in the SPX. Okay, this is another kind of short position, and this is something I've actually shared in the Theo chat room. So kind of tune in and turn on. Not only am I sharing it in the Theo chat room, it's also on a brand new trade tracker. So if you guys have missed that before, we do, in fact, have a trade tracker. What's the trade tracker? All right, so every single day, I want to make everybody that's a member here kind of aware of what we're doing and where this is found. Every single day now, we're updating trades as we're doing them in here. And there's nothing more simple than a spreadsheet. So you can see I'm actually working an iron condor here. Now, I may not fill in this iron condor today. Still working right now. And the moment it fills, I'll actually throw it into open and filled orders. So I've also opened another Amazon trade, which I am going to show you momentarily here. But that is our Theo trade tracker, as simple as it is, and how effective. Everybody gets, all fancy. I just wanted a spreadsheet. Here's the trades that I do. Okay, what's open and what's closed over there. And again, that's something that can benefit you substantially. Okay, as you try to track a number of our trades over there. So what I'm actually have built and I'm trying to sell is a slightly bearish bias iron condor, approximately 74 days out in time. And kind of scroll through some of the strikes. Again, you can see the put strikes. It just ripped right through them over there. Right here at the 1720, 1710. Those are my put strikes. Okay. On the upside, I've got some call strikes that I'm trying to sell over here. Okay, and this is the 2050, 2060. I'm trying to sell that thing for about a 350 credit. Next, all right, one of the trades that I really wanted to spend a little bit more time on over here is Amazon. What am I doing on Amazon? Okay, I've now built a short position inside of Amazon. There's no stop order, no stop of any kind. Never will be, never going to happen. Okay, so let me recreate this Amazon trade. Now, if you're looking at this from a technical perspective, you're like, oh, what does he see technically? Is there going to be a degree of resistance? This is not a technical analysis-based trade. This is a trade that looks, in sheer respect to the fact, Amazon was trading at $4.75. It is now trading roughly, let's just call it $5.60. When a stock moves up, I don't know, 80, 90, 100 points, okay, in a matter of what? 8 to 10 trading days? Okay, how far outside of his expected move? So here's an 11-day expiration that's showing it should move in about a $27 movement, okay, in 11 days. It is almost tripled that. Again, almost tripled, all right? In fact, it's coming right to it. 3 times the expected move for 11 days. So it's a 3 standard deviation move. I have expectations that it comes in a little bit. That means sells off to a degree. And as such, I built a very, very basic, very, very simple spread. I did it earlier today. My pricing wasn't perfect. The trade's even better right now than it was earlier this morning. All I did was buy, okay, what was an at-the-money spread. All right, and right now it's trading for about $2.05. I'm not perfect. I paid about $2.43 for the position. Paid $2.43 for the position. So what am I? I'm losing a couple of bucks right now. That's all right. You're never going to pick a top. You're never going to pick a bottom. So on this Captain one lot strikes again, it's a bearish position inside of Amazon. The great part of it, it'll last 31 days. Now, I could be wrong. 28 days in a row. All I need is Amazon, okay, below 547.50. Now, I need it below 547.50 right before the expiration, or I need Amazon down maybe at the 520, even 515 level, okay, would be more exciting. That would give me full profitability on this spread quite a bit earlier over there. There's no stop orders of any kind on here. Again, I'm trying to make about 60% of my initial risk. My initial risk was $2.43. Trying to make about 60% of that on that Amazon spread. Again, it is a bearish play inside of Amazon. All you can say about this market right now is watch your head to the upside. S&P is right now just off, okay? Like 3 points off their highs of the day. Just about 15 minutes to go to the close. Again, though, I want to point out, bonds, relatively strong. Haven't really backed off, okay? Don't take your eye, okay, off the volatility ball because we're still in it. The big, again, in-your-face rally, it's all part of the game plan. Things seem quiet. They're not quiet. Traders just resting up a little bit. Round 2 is coming up over here in the next couple of days. Watch those bonds. It's my belief they're what's going to lead the next bout of volatility over here. With that, thanks a lot for joining us here at Theo Trade each and every evening and all weekend long. My name is Don Kaufman. Be back on tomorrow. Bye-bye.